Hello dear traders, it's me Kate Stichin and you are watching a recap of the Asian session on October 10. After a long weekend, Japanese stock opened the session on Tuesday in a positive territory. Australian stock indexes are also gaining ground for the fourth session in a row. The geopolitical tensions in the Middle East have definitely lowered risk sentiment in the region, yet the decline was quite moderate. Stocks advanced on dovish comments made by the Fed officials on Monday. For instance, Fed Vice Chair Philip Jefferson believes that the central bank will have to act cautiously, mainly due to soaring bond yields that have recently hit a record high. Also, Dallas Fed President Logan supposed that the Federal Reserve might not need to raise interest rates further this year. These comments prompted speculation that in November and December, the US Central Bank may pause its rate hikes. This week's release of inflation data will play a crucial role in shaping the forecast for the US interest rate. Additionally, the annual meeting of the International Monetary Fund is set to take place between October 9 and 15. The meeting will feature a discussion of strategies to stabilize international currency exchange rates. While remarks from prominent global financial experts are also expected to influence the market, current predictions indicate a stable outlook for the US interest rates in the near term. According to the FEDWATCH tool, there is a high probability of 86% that the Federal Reserve will maintain stable interest rates in the next months. Meanwhile, for the meeting scheduled for December 13, the advocates for a dovish rate forecast have slightly declined down to 72.5%. In the meantime, the yield on the US Treasuries and the US dollar rate have diminished following dovish comments from the US regulator officials. On Tuesday morning, the US dollar index rose to around 106.2 against the 6 other major currencies. However, the current surge in oil prices poses a significant hurdle to reducing inflation. Consequently, this caused a large shadow of doubt over a possible pause in the interest rates in the United States. Moreover, today's decline in the yield of US Treasury bonds may be short-lived, and thus the greenback continued to edge moderately higher in Asian trade, holding within the daily range of 105.90 and 106.20. It's still too early to say that the dollar's rally has come to an end. Starting from Wednesday, the United States will be releasing reports on inflation. In addition, several more representatives of the Federal Reserve are set to speak this week. Considering the fundamental backdrop and geopolitical situation, the US dollar is quite capable of retesting the 107-point mark. Today, the dollar has lost some of its early gains and retreated amid falling US Treasury yields, and this helped the currencies of the Asian region to get some respite and recover slightly. The Chinese yuan benefited from a weaker US dollar. The yuan exchange rate has been artificially supported by the government for some time already, while China's gold and foreign exchange reserves are gradually melting. All this time, the country's central bank has been trying to stimulate the recovery of the Chinese economy. However, travel and spending data during the Golden Week celebrations indicated a weaker demand than expected. Moreover, this morning, China's largest private developer, Country Garden, issued a warning that it's unable to meet its dividend payment obligations on time. This negative news from the nation's real estate sector amidst a broader economic downturn calls for more aggressive economic stimulation from Beijing. In the meantime, Japanese authorities are also trying to support the weakening currency. Last week, the country's central bank conducted a substantial purchase of government bonds as soon as the yen crossed the 150 mark against the US dollar. The immediate response was a quick drop of around 250 pips that was then followed by a swift recovery. The Bank of Japan initially announced unscheduled purchases on October 2 and indicated readiness to undertake flexible measures such as additional direct purchases of government bonds. A considerable amount of economic data is also expected to be released in Japan this week. And this week, Japan will release a slew of economic data. However, none of these reports will incite a shift in the country's monetary policy. Furthermore, Japan's Finance Minister Shinichi Suzuki reiterated on Tuesday that the current weakening of the yen is caused in part by interest rate differentials. Surprisingly, the Japanese yen benefited from the conflict in the Middle East, emerging as a safe haven asset, while the US dollar has been the #1 choice for investors over the past 12 months. This week, the situation has obviously changed. And now the yen and the dollar appear to be playing tug-of-war game as markets are looking for safer havens. Additionally, the Bank of Japan again proposed to buy Japanese government bonds amounting to 1.4 trillion yen. As a result, the dollar-yen pair saw recurrent dips and spikes during Asian trading between resistance at 149.10 and support at 148.20. By the close of the Asian session, the Japanese currency was again trading higher, hovering around 149 against the US dollar. On Tuesday morning, antipodian currencies also saw an upward movement, mainly on the dovish remarks from the US Fed officials and thanks to a weaker greenback. Moreover, global commodity prices also recorded a slight decline today. However, it's important to consider that geopolitical tensions could boost oil prices, thus increasing commodity demand and intensifying inflationary pressures in the Australian economy. Under such circumstances, the Australian dollar stands a strong chance to strengthen. But today, the Aussie couldn't maintain its ascent against the US dollar, interrupting its four-day rally. Consequently, the pair began to descend within the daily range of 0.6391 to 0.6434 and ended the Asian session in the bear territory, just slightly above the crucial mark of 0.64. The New Zealand dollar closed this trading session near the pivotal mark of 60 cents against the US dollar. On the daily chart, the Kiwi attempted to regain its ground against the greenback within the range between 0.5999 and 0.6043. However, the odds were not in its favor, ultimately forcing the Kiwi to retreat. And we continue to monitor market developments to keep you updated on all important events. Don't forget to subscribe to the InstaForex channel and to leave your comments below. Our experts will be happy to answer any questions you may have. This wraps up our recap of the Asian session today. Tune in again in a few hours and see you online soon.